Welcome to Power Charting. This is for Friday, June 2nd, 2023, the beginning of the last month of the quarter, an important month. Seasonality we saw can be good in the month of June based on the way that we were looking at seasonality. A footnote, a number of stocks have seasonality in the year that shows them literally peak out or spike up in early June. So it could be stock by stock that there could be a spike up and then a pause. And then, of course, the third quarter appears to be somewhat of a sideways quarter. And we will revisit seasonality in the weeks ahead. With that, also, we're going to do a swing trading case study on Salesforce, CRM, and very interesting stock at this time. And then a stock index update with some breadth studies and point and figure. Okay, so disclaimer, and then this announcement, very exciting that my mentor of 40 years and dear friend, Joe Turner, is going to be joining me for a Trading Through the Business Cycle workshop. And this is going to be so much fun because this would be what we would do day in and day out in our shop with Martin Pring, and we would just keep studying the business cycle and how it related to financial markets and how best to build models, indicators, methodologies around these tools. We are going to talk about that in these 3 weeks, and I think it's just going to be a phenomenal opportunity to really develop and build up your knowledge of business cycle investing, which really does, I think, is the one of the most important attributes of the time ahead that we have, with the markets going from big trending markets to big trading range markets. And I'll show you more on that in a minute. Okay, and here the unconference, just to remind you that we'll be doing a swing trading workshop with Rahman on the day 1, July 13th. And on that same day, William Reardon and Rahman are going to do a very exciting intraday trading workshop. And they are masters of that craft. And so that's going to be just a phenomenal day. My understanding is that for people that cannot attend both days, that there's going to be a way to break out and just attend one day or the other. wyckoffanalytics.com for more information. And with that, a tribute to a very important person, Mr. William J. O'Neill, a remarkable mentor to many of us. He was a truly great investor. If he had been nothing more than that, he would have had a phenomenal career. He is going to become a legend. His legend's only going to grow in the years ahead with the great achievements. But what makes him so special is the fact that he wanted others to learn this great methodology that he had developed, which was the synthesis of technical and fundamental analysis into a complete whole. And he called it the CAN-SLIM method. A phenomenal teacher, because he created this process, this acronym CAN-SLIM, which has become almost in our industry, a household word. And in it is the rules of the methodology that he developed and then turned it into a teaching aid for others to learn it. So many people that I know have been so profoundly positively affected by the wisdom and teaching of Mr. O'Neill over time. And I personally, 40 plus years ago, started to take the Daily Graphs chart books, and I carried those books with me week in and week out, day in and day out. I never went anywhere without them. Always had my nose in them when I was anywhere. And that was the synthesis of all the CAN-SLIM methodology. And so I just was immersed in Mr. O'Neill's view of the world, his approach, which was so good, so sound. And so I am considering him to be a mentor to me and many, many others, many who have never met him, but have seen him do videos or whatever, read his books. And I just want to end here with two books that I think really exemplify his approach, which he has graciously given the world, and that is through his IBD newspaper and investors.com and all of the great tools that he's made available to people. And that is the book, How to Make Money in Stocks, which is absolutely a classic on how to read stock charts. And he was a master. And then also how to implement fundamentals with the charts. And then the other book that I think is a must-have, must-read book, and I just keep them with me. I'm always looking at them, reading them over and over and over, is How to Make Money Selling Stocks Short. If you're not a short seller, and most of you are not, very wise decision, but that book tells you a lot about what stocks in their charts look like when they are running out of steam and ending their campaign runs. And so both these books are classics. And with that, Mr. O'Neill, we will miss you, and very much a profound life. And thank you for generously sharing so much of your personal wisdom with all of us. Okay, now I'm going to go ahead and just put all of this on here. You've seen these charts before, but what I'd like to do is just make the point here that we, in the 60s, came out of a period of low, stable inflation rates, a strong bullish market in stocks with the Nifty 50 era, very similar to our current social networking stocks and the FANG stocks and so on, many of the growth stocks we've had in the last decade. And then we came into the late 60s, inflation took off. These are the inflation numbers up here for that era across this whole zone. You can see they went from the low single digits all the way up to 11 and a quarter here in 1980. And this is every 2 years, but you can see the continual ramp of inflation. Well, we started this cycle with a bang because we were at 4.7% inflation. And then in October 22, we were at 7.7%. So inflation just has really ramped up, fastest increase of interest rates. And this changes the game for stocks. Absolutely. Inflation just changes the metrics for earnings and dividends and everything else. And you can see what has happened, that through the 70s, we went from trending to range bound. So we started that period with a run up into 1,000 on the Dow at the end of 1965, 66. And here you can see that the Dow also has run up at the end of 2021 into its final high. And in the case here, this yellow shaded area represents a zone that the Dow Jones could not get through for that whole decade. So is that what we have ahead of us with the increase in inflation? The Fed's finding inflation is quite sticky. They're now threatening to raise rates in June again. And that PCE inflation numbers last week came in stickier than they expected. People think they'll raise because of that. And so, and the economy is slowing. So this is quite a mess that we're in. Many monetarists have avoided buying this market because they understand the tight money environment that we're in. We, being tape readers, investors, always seeking leadership, have been able to find stocks that have been leading and acting well. And so we have, in a very judicious way, participated in those stocks. So let me just say here that what we're going to do is we're going to zoom in on this zone as our roadmap for the period ahead and see whether or not there might be a family resemblance now, and whether or not and what might happen next to demonstrate that, in fact, this analog is more or less rhyming with what we had happen back then. Okay, I'm pointing to the highs and lows that we've had that have been quite evident. I didn't put this one in here. Let me just draw it in right now. A straight line, obviously. And so here you see the highs and lows. This is the 2018 low here. This is the top in 61. This is the top in 2020, which precedes the COVID decline. This decline is a combination of the Cuban Missile Crisis and Kennedy having a big battle with the steel companies over prices. And this was just a straight down drop in 62, straight down drop with COVID. But look at the similarities between these two rallies. So 62 up to the final high. You can see that it was just persistent all the way. That is, in fact, what we've had here in the COVID rally. And then a top was formed here, and a top was formed in 65. This decline was the important bear market off that top. This is what we had happen in 2022. Sort of a two-step affair here, but here's an important low in October of 22. Here's an important low October of 66. Then let me put this in. Let's keep in mind that there is an election in 1968, November, presidential election. Richard M. Nixon is elected for his first term. 2024 is an election year, presidential election. Let's keep that in mind for how 24 could come to pass. Now, this is the part I really want to be clear about, is that 68 had a two-stage rally that took it back to the highs of 65, 66 at the end of the year. We had a high at the end of 21, 22, and that high is preceded the bear. This high preceded the bear in 66, and then we had a two-stage advance. Well, so far, we have this advance here, this advance here, and we have an advance that we're in now. Now, this is in the Dow. The Dow's lagging some. The Nasdaq 100 has acted extremely well and is leading the way and is pushing up towards its prior highs. So maybe the Nasdaq 100 is more akin to what the Dow was like in the 60s. But what I suggest is that, and we'll put a yellow circle around this area because we want to compare then to now, is that maybe we have, as we had one little push up right here, we have a push up, or maybe we're getting that now in the NASDAQ, and then we have a more important decline that takes out this low right here, just as was the case. Look at the support across this zone, and it was sprung back then in 68. So in the first quarter of 68, we had an important low that took place that preceded an advance, a good advance that encompassed the final 3 quarters of the year. So is it possible that we could have that kind of a synergy between then and now, where we do get, in fact, a rally into the 2024 election? And keep in mind that these are just the notes that you can screen capture, and hopefully I've covered all that, is that this period in here, that the thing the Fed has to do is they have to get all their rate hike business out of the way before we get into next year, because they don't want to look political. The other thing is that they actually behind the scenes will start to pump liquidity into the system in an election year and it gives an upward bias to the stock market. And they have to start doing that very early. So they may be doing that in the fourth quarter of this year as they prime the pump for a better 2024. And the reason they do that is because they don't want to be accused of having a big bear market in an election year, which tends to weigh heavily on the incumbent. And so they want to look as apolitical as possible. And so I believe that any business they're doing with rate hikes is going to be finished here in the middle part of this year, or maybe into the end of the year. So that is the analog that we're looking at. And could we get a push up? We may be having that now in the Nasdaq 100, and then a pullback below the lows that we had earlier in 23, and that springs the low and sets up a better rally in the election year. Okay, and with that, let's move on. Just a point and figure chart, kind of interesting. We've looked at this swing trading count across this area a number of times. This count gets us up to a minimum count of 405, maximum count of 430. We're at 420 right now, so we're 2 boxes away from fulfilling this swing count potential. But also this count here is a swing count, and possibly this whole thing is a much bigger count for a bigger move. But for now, let's just focus on swing counts. This count takes us to a minimum objective of 430. So these two count objectives match. And then we have this higher count gets us up to 460. And that may in fact be the upthrusting action that concludes this bull run that we've had off the lows in October of 22, and that gives us an upthrusting action, and maybe that gives us the pullback to a spring here, and as we just looked at on that analog. Okay, so that's a mess. Anyway, so here I'm talking about my drawing, not the market. And so here, just a comment on, this is the New York Composite. You see lower highs and lower lows, weakness accompanied by an advanced decline oscillator that generally is making lower highs, but now all of a sudden it's trying to make higher lows. Whether it can continue to do that, that could be the emergence of tiny green shoots. So we will watch, but what we need to see here is a big bulge upward towards overbought and getting out of this downward trending condition that we're in at this time. No telling whether this can happen or not. And low up and down volume into the end of May. June, this could all pick up. June, the whole trend of the market, the whole volume characteristics could trade. But here you can see that both up and down volume are quite low here. We don't know whether down volume or up volume is going to have a big spike in here, but I do like the idea that you have higher lows throughout here in the up-down volume, the net numbers. Now let's turn to the Nasdaq comp. Much more interesting picture, because look at this uptrend. Big uptrend. We are now back to the highs of August. That is potentially important resistance. Note that we have lower highs throughout here, and those lower highs are showing diminishing breadth as the market goes up, meaning fewer and fewer stocks are driving the index higher, which are those super big cap FANG type stocks. And then also you can see that net or down volume and up volume are both quite low here. But look what we have. So here's our divergent characteristics, those two red lines. And then also we see here just the start of a non-confirmation of the upward trend of the Nasdaq comp by net volume. So that's going to be very interesting to watch, because that might be a divergent characteristic that says that at resistance here that we are going to start to find it difficult for these stocks to proceed. But that could produce some selling in those mega caps that could flow out into some of the smaller good companies where there's deeper value like the Russell 2000 and so on. And so with that, let's turn our attention. Here's just a swing count on gold miners. This is a distribution count. This was an accumulation count, worked really well. This distribution count over here, counting this across, you can see gives us a count to 3050, exactly where we went. It stopped there. Now we're catching a bid in gold miners at this minimum count objective range. 2850 is the lower count. If we can only get to the minimum count objective here, that's generally a bullish characteristic. And so it may be that this correction for the time being in the gold miners might be about over, or at least we'll have a more important rally here for a period of time. I want to just make a comment about Nvidia. This is a chart I showed you last week, so I'm just putting up all the markings as we had them from last time. But note that we had a count 392 to 424, a swing trading count up to 384, and that's where we were. We were at exactly 384 last week when we looked at this, and we said that there could be some follow through, but this looks very climactic. And you can see that we have a larger count potentially looming for Nvidia. But if we get up into this count zone, and we were at the minimum objective pretty much last week, but this reaccumulation count potential, we need to now have this go sideways in a pause and build a count for the next move up, which could encompass this much bigger count. But I want to point out that as of, I think this was today, Thursday, that we hit 419.38, just a smidge below the 420 level, which is one box below our maximum count, but it's still, we've hit this count. And we're at 420. This is a climactic surge. And what we want to see is an important pullback, which establishes an automatic reaction. And in fact, we did have an important pullback occur. And now we're attempting to test that 400 level. So we'll keep an eye on that. But this big count is working out pretty well. Here's Salesforce, very important Dow stock. So let's just have a look at this stock, because this red line shows that we had, first of all, this big column of X's is climactic. So let's just put a buying climax here, automatic reaction here, likely some kind of a range bound condition for a period of time. We have a trend channel, and this trend channel is defined by this point and this point, and we drew a parallel on this area and this area. You can see that we are overbought here at the top of the channel line, and this overbought condition in fact stopped the advance. But do we have a swing trading count that confirms? Well, in fact, we do. So we have a count. Here's a swing count of reaccumulation with a jump out and a back up. We count from the backup over to this low, 13 columns, takes us up to 2014 to, I think that's 2030, I think is that where it is. We've hit 2024 and turned sharply right at that channel line, and we are now threatening the bottom of this lower demand trend line. So very interesting place. And I'd like to just point out in the little bit of time that we have left that these tools are so good for telling us where to buy and when to sell. Here's a upward trend channel breach right here, which was an oversold condition in the reaccumulation. This is testing this, and it's below the demand line, which is a place that could prove to be an excellent entry where you can add or initiate positions and for a swing trade, and you finish your count shortly thereafter. So any attempt to go down towards the bottom of the channel can be an excellent place to make a swing trade. And yes, and then I got a minute left, so let's get right to this. So these swing trades and these channel lines are so valuable in terms of determining entry and exit strategy. Okay, so here, if we take that trend line, we extend our point and figure chart, same chart, more data, we see here that we have a count objective that goes from a sign of strength here. Let's see if we can, yeah, sign of strength, and then a backup into support, and we have a count objective area. This first objective is pretty much hit as it consolidates its breakout at, this is 182, and then it has a count that goes up to 220. And so 220 is the count. We've gone through this by 2 boxes, and then we had that more important pullback. And so with that, and here's the pullback right there, that represents how much it's pulled back so far. And so here's the chart notes, and I've just gotten the word that we are done. So thank you so much for being here, and we will see you next time. Take care.